toward a bipartisan stablecoin regulatory framework. But the bill we have before us today kind of discards a lot of that progress instead of building on it. Today, we have a bill in front of us that would allow Donald Trump to issue his own stablecoin and create loopholes so that his rich buddies continue to get even richer. Unfortunately, as currently written, this legislation doesn't uplift both industry and consumers, which should always be our goal. Nonetheless, I think it's important to govern how we want to be governed. So I'm going to offer a common sense, bipartisan supported amendment. It won't completely fix all of my concerns with this legislation, but it'll make it a lot better for people back home. Even more importantly, it'll model how we should be putting together a bill as important as this. So let me break it down to you because it's really short, really simple. All the stable coins we're regulating under this bill have to hold reserve assets for them to have value. In this bill, we spell out what kind of assets count, like coins and currency, treasury bills, and demand deposits. All my amendment says that is if those assets become tokenized or digital in the future, those assets are still eligible to back up stablecoins. This amendment is a clarification, is good for the stablecoin industry, and is good for our constituents who want us to responsibly embrace innovation. And into this base bill. So I urge my colleagues to join me in legislating on a bipartisan basis and passing my amendment. I yield back, Mr. Chairman.
Who seeks recognition? Ms. Waters, ranking member of the full committee, recognized to strike the last word.
Thank you very much. I do believe that Ms. Williams has offered this amendment because there was some discussion along the way about what reserves, how the reserves are handled on the blockchain. And I would now request a colloquy with Mr. Foster to see if he dealt with this issue. As I am examining it, it seems as if not enough attention has been paid to whether or not tokenized reserves on the blockchain is somehow better than the digital reserve. Are you familiar with this?
My apologies. I just stepped into the hearing here. I don't know the context, so I prefer to wait.
Okay, reserving my time. Ms. Williams? I do believe that what you are describing ensures that the reserves are real and that they are can be counted on. Would you further delve into that? I would yield to you to help further explain that.
Absolutely. So every currency needs to have actual assets to back it up. And in this bill, it spells out what those assets can be: currency, coins, demand deposits, treasury bills, and more. And all my amendment says is that if these assets are digitized in the future, that they're still eligible to serve as reserves for stablecoin. And it's just a clarification to be helpful as the technology continues to develop.
I don't think it makes sense. Thank you very much. I would urge support for Ms. Williams' amendment.
Gentlewoman yields back. The gentleman from Wisconsin, the author of the bill, Mr. Stile, you're recognized to strike the last word.
Thank you, Mr. Chairman. I'll be brief. I rise in opposition to the amendment. The amendment's unnecessary. Reserves in tokenized forms would already be captured. And so, for example, a registered money market fund that is tokenized would be a qualified reserve. So the amendment is unnecessary. I would urge my colleagues to oppose it. In brevity, I'll yield back.
Gentleman yields back. Is there any further debate on this amendment? Anybody to speak in favor? Hearing none, the question now occurs on the amendment offered by the gentleman from Georgia, Ms. Williams. All those in favor, please say aye.
Aye.
All those opposed, you'll signify by saying no. No. Independent of the chair, the nays have it. The nays have it. The amendment is not adopted.
Recorded vote requested.
Recorded vote is requested. All those in favor of recorded vote, please raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the committee rules, further proceedings on this amendment are postponed. Is there an additional amendment to Mr. Stiles' amendment in the nature of substitute? Mr. Lynch is recognized.
Mr. Chairman, I believe I have an amendment at the desk.
Stand by and we'll have it distributed.
Thank you so much.
Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 29.
Without objection, the amendment will be considered as read, and gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes in support of this amendment.
Thank you so much, Mr. Chairman. Mr. Chairman, I am thankful that this most recent iteration of the bill, the Stable Act, does preclude paying interest for stablecoin issuers to pay interest on payments. So I'm thankful, because that would have introduced a whole host of issues that we would have had to get into, but thankfully we can avoid that. The one gap here is, however, that it does not preclude a stablecoin exchange or crypto exchange from collecting interest, or paying interest rather, to depositors. And so that does present a whole host of concerns if exchanges now were to be in competition with savings banks and others for resources, especially the fact that so much has to be held in reserve. In many cases, the reference denomination is the US dollar, And so those reserves would be held in dollars. This amendment would prohibit crypto exchanges or other parties affiliated with stablecoins from paying interest or yield to stablecoin holders. While this bill does not include a provision that would prevent a stablecoin issuer from paying interest or yield to a holder, it does not prevent an exchange or other party from paying attractive yields on stablecoins. We've already seen the incentive crypto exchanges offer to attract stablecoin holders. Coinbase offers a 4.1% APY to its customers holding their stablecoins at Coinbase. The exchange even pays a higher 4.5% to consumers who hold Circle's USDC. Given that Coinbase and Circle are now business partners, the companies share revenues produced by Circle's USDC, and additionally, Binance offers even higher yield of 11% on USDC. So these types of business arrangements between stablecoin issuers and exchanges are a clear example of how closely stablecoins are connected with cryptocurrencies, and it refutes the claims that stablecoins do not pay interest. This essentially makes stablecoins an investment option and not just a mechanism for payments. Additionally, I have concerns about how these types of offerings will impact credit availability, particularly for local communities. I'm skeptical of claims that stablecoins issued by non-banks will not compete with bank deposits and undermine the ability of banks to make loans to consumers and Main Street businesses. Allowing crypto exchanges to pay interest on stablecoins would create competition between non-banks and FDIC-insured banks. Non-bank issuers would also face much lower compliance costs than traditional banks, allowing them to offer significantly higher interest rates, creating an unfair playing field. When consumers put fewer deposits into banks, it leaves local banks with less credit availability and therefore less capacity to support local communities through loan programs. Also, siphoning off deposits will harm the very local and community banks, which my colleagues on the other side of the aisle have stated they would like to protect. This amendment would prevent the bill from creating unnecessary and harmful competition between non-banks and FDIC-insured banks, ultimately harming Main Street businesses. That's about it, Mr. Chairman. Thank you, and I yield back.
Gentleman yields back. Who seeks recognition?
Seek recognition, strike the last word.
Mr. Stahl.
Thank you, Mr. Chairman. Move to strike the last word. The amendment would undermine deliberately chosen language in Section 489 of the Stable Act. The restrictions carefully focused to preserve payment stablecoins as payment instruments that are backed one-to-one, not as investment instruments provided by the issuer. So to include other entities under that prohibition would be inappropriate in this bill, which is concerned with ensuring strong reserves maintained by the issuer for these payment instruments. So as you know, we're working on other digital asset legislation, including digital assets market structure, and I'd encourage my colleague to work with us on clear guidelines related to this issue as it applies to other types of entities beyond issuers. So I appreciate the amendment, but encourage my colleagues to vote no. Mr. Chairman, I yield back.
Gentleman yields back. Is there further debate on this amendment? The gentleman from California, ranking member, recognizes strike the last word.
Thank you very much, Mr. Chairman. I'm listening carefully to Mr. Lynch, and I'm listening from your side of the aisle, and it seems as if there's some agreement that these stablecoins should not be issuing interest, that it should be done by the exchange. Am I to conclude that basically there's some agreement? Mr. Hill?
Mr. Stahl.
I wish to enter into a colloquy.
I'd be happy to.
I just said that, based on what I think I just heard from you, is that there appears to be some agreement about stablecoins should not be issuing interest, and that you guys have given this some thought, and you are open to taking a closer look at this in order to make sure that it's the exchange rather than the issuer, and that you want to work further with us on this, is that correct?
I'm definitely interested to learn more about you and your colleagues' position. I think it's important that we're preserve, as it relates to stablecoins, that we're focused on to preserve the payment stablecoins as payment instruments that are backed one-to-one. But I'd be happy to engage in further dialogue, in particular as we go about completing the drafting of the market structure bill that'll be introduced for this Congress.
Thank you very much. I support this amendment by Mr. Lynch, and I yield to Mr. Lynch.
I thank the gentlelady for yielding. Yeah, we get the one-to-one backing. We get that. The last 6 or 7 stablecoins that failed all had one-to-one until they didn't. That's the whole idea. That's when they broke the buck, right? So I understand that stablecoin issuers themselves will not be able to pay interest. However, there are arrangements between issuers and exchanges like Circle and others where they have partnerships with exchanges. So what they could do, and I imagine what they will do, is they will park their stable coins at the exchange. And the exchange, under this bill, is allowed to pay interest. So that would defeat the efforts by the bank. The traditional banking community has been lobbying both the House and the Senate to get rid of that stablecoin paying interest capacity. But now it just moves to the exchange, and the exchange will pay the interest, and the exchange will compete with the traditional banks and compete for deposits. That's what I'm trying to get at with this amendment. I'm trying to get rid of that. I would like for depositors at banks to have an advantage here because their deposits are insured at traditional banks. We don't want them to begin parking their deposits at uninsured exchanges to the detriment of the lending community that services local communities. That's the idea here. It would put traditional banks, because of all the regulations that they've got to abide by, it would put them at a serious disadvantage. And it would create an advantage for the exchanges to be able to pay higher interest rates for parking, stable coins at the exchange, and they would outcompete eventually that base that's located right now at our traditional banks. So it would be bad all the way around. And I yield back to the ranking member.
Reclaiming my time, I would simply ask for support for Mr. Lynch's amendment. It seems as if we're all thinking the same way about how we deal with this question of interest. And we have a lot of consideration as we look at our lending institutions, et cetera, about perhaps what maybe look like competition. So I ask for an aye vote on Mr. Lynch's amendment.
Who seeks recognition? Is there further debate on the amendment? Hearing none, the question is now occurs on the amendment offered by Mr. Lynch of Massachusetts. All those in favor, please say aye.
Aye.
All those opposed, please say no. No. In the opinion of the chair, the noes have it, and the nays have it, and the amendment is not adopted. A recorded vote is requested. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subchapter C5 of Rule 3 of the committee rules, a vote on this amendment is postponed. Is there further amendment to Mr. Stiles' amendment in the nature of a substitute? Mr. Lynch?
Mr. Chairman, I believe I have an amendment at the desk.
Amendment at the desk. Will pause while it's distributed.
Mr. Chairman, I reserve a point of order.
Gentleman from Wisconsin reserves a point of order.
Thank you so much. Thank you.
Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 11.
The amendment will be considered as read, and I yield to my friend from Massachusetts 5 minutes in support of his amendment.
Thank you very much, Mr. Chairman. This amendment is crucial to ensuring the stability of our financial system and protecting consumers from potential harm. This amendment would require all issuers and distributors of stablecoins to be federally insured depository institutions. Without this requirement, we are opening the door to significant risks, runs on these assets, failures, and ultimately a destabilized economy. Stablecoins are functionally like bank deposits. Issuers make a promise to redeem them on a dollar-for-dollar basis whenever the consumer requests it within a certain time. As my colleagues would likely agree, products that have the same risk should be required to comply with the same regulations. Therefore, stablecoins should be regulated like deposits. Institutions insured by the FDIC benefit from critical protections such as deposit insurance, regulatory oversight, and supervisory powers that ensure our financial system stays secure. We also have procedures in place for resolving failed banks, capital requirements to safeguard the stability of these institutions, and measures to ensure that they remain safe and sound. The Biden administration's President's Working Group recommended that Congress pass legislation prohibiting persons other than federally insured depository institutions from issuing stablecoins in order to provide for supervision, prudential standards, and access to a federal safety net. The STABLE Act provides a path that would incentivize most stablecoin issuers to bypass these protections, either by choosing to be uninsured state-based issuers or by selecting an uninsured OCC-chartered non-bank issuer option. This move would exclude key regulators like the FDIC, the Federal Reserve, and the NCUA from playing a meaningful role in establishing the safeguards we need for this market. Additionally, in the event of failure, the FDIC must be able to step in as a conservator or receiver. This would avoid bankruptcy proceedings for the stablecoin subsidiary as long as the FDIC determines that conservatorship or receivership for the parent bank is the best course of action. I remain deeply concerned about the risks posed by uninsured deposits in this space. Advocates for the stablecoin industry claim that these products are fully backed one-to-one and that the reserve requirements are more than sufficient. But history has shown us time and time and time again that uninsured deposits are vulnerable to systemic runs. When you tie stablecoins to volatile crypto products, that risk only increases. And when you allow stablecoin issuers to be involved in other commercial activities that invite risk, that risk multiplies exponentially. We should not forget the lessons from the failure of Silicon Valley Bank. Circle, one of the top stablecoin issuers, held a $3.3 billion deposit in uninsured deposits at the Silicon Valley Bank, representing a significant portion of USDC's total reserves. When SVB failed, USDC's value dropped below 88 cents, and it only retained its $1 peg after the federal government intervened and bailed out those uninsured depositors. If we don't act now to regulate stablecoins properly and provide a strong safety net, the risk of widespread runs on these assets becomes real. This amendment ensures that stablecoin issuers are subject to the same protections that our insured depository institutions must adhere to. It would create a regulatory framework that protects consumers, promotes financial stability, and safeguards our broader economy. We have a duty to act in a way that guarantees these assets are issued responsibly, and I urge my colleagues to support this amendment, and I yield.
Would the gentleman yield for a question?
I would.
Yeah, thank you, sir. The intent of the amendment is that it prohibits a non-bank from issuing a stable coin. Is that fair? Because the way I read it, it says notwithstanding any of the provision, only a sub of an insured bank may issue a stablecoin. So you prohibit non-banks.
If they acquired, if they acquired deposit insurance, they could do that.
Well, but we
They could
don't.
operate.
Okay, well, we don't, but non-banks aren't subject to deposit insurance. You're saying that if that regime.
That's what we wanted to do. Yeah, we want to import that regime,
I see. Okay, so you're actually arguing that all stablecoin issuers should be FDIC insured.
Correct, yeah.
Okay, I just, when you look at the actual amendment, the implication was you're prohibiting because you're amending this bill that permits both, that you're, since it's running out of time, I'll yield back to you, but I now understand your point.
Okay, thank you, Mr. Chairman.
I thank the gentleman from Massachusetts who yields back. Is there others to speak on Mr. Lynch's amendment? Hearing none, then I will call the question without objection. The amendment is, let's see, the question is now on the amendment by Mr. Lynch of Massachusetts. All those in favor, please say aye. Aye. Any opposed, say nay. Nay. In the opinion of the chair, the nays have it. The nays have it, the amendment is not adopted. Would you like a recorded vote? Gentleman asked for a recorded vote. All those in favor, please raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the Committee Rules. Further proceedings on the amendment are postponed. Is there additional amendment to the amendment in the nature of substitute? Mr. Caston, would you seeking recognition? You're back. We're back live now. Mr. Caston seeks recognition. There's an amendment at the desk, and we'll pause for it to be distributed.
Mr. Chairman, I reserve a point of order.
The gentleman from Wisconsin reserves a point of order. Thank you so much. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Caston of Illinois, designated as 38.
The amendment will be considered as read, and I now call on my friend from Illinois, Mr. Caston, for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. So this amendment would address potential undisclosed financial relationships between stablecoin issuers and cryptocurrency exchanges or other financial institutions. As we know in this committee, and certainly spent enough time talking about it today, dollar-backed stablecoin issuers tend to mint and burn new stablecoins only when institutional customers that purchase tokens in large quantities, including exchanges, fintech firms, et cetera, before they're made available to retail clients or secondary markets. We also know that's a potential risk. In 2021, a year before its collapse, Terra USD fell below its dollar peg to 90 cents. This was an algorithmic stablecoin, of course. But we found out later that it recovered thanks to a secret deal with the U.S. high-speed trading firm Jump. Jump agreed to purchase tens of millions of dollars worth of Terra to push its price back to $1, but in the terms of that deal, Jump was allowed to buy Terra and Luna at 30, 40, and 50 cents over the next 3 years, leading to more than $1 billion of profits. That is illegal. And in fact, the founder of Terra was convicted of fraud. A subsidiary of Jump was settled a fine, both of which were brought by the SEC. Yes, that was an algorithmic stablecoin, but similar market manipulation could happen with fiat-backed or other payment stablecoins, and nothing in this bill prevents that from happening again. To the contrary, I think it makes it more likely because on page 75 of this bill, it explicitly says that payment stablecoins are not securities, which would virtually guarantee that the SEC could not prosecute market manipulation by stablecoin issuers of the type that happened with Terra Luna. This amendment simply fixes that. It would require stablecoin regulators to adopt anti-deceptive practices and anti-manipulation rules that are consistent with CFTC rules required by Dodd-Frank. As you'll remember, Mr. Hill, I had offered a similar amendment during the stablecoin markup last Congress, and you had offered to work with our office on the issue under many subsequent legislation. So I'm just trying to make sure that we address this now. And I hope the text is simple enough that it can reach bipartisan amendment to make sure that we close this proverbial barn door. Thank you. I yield back.
Gentleman yields back, seeks recognition. The author of the bill, Mr. Stile, recognizes to strike the last word.
Thank you very much, Mr. Chairman. I'll be brief yet again. Appreciate my colleague's concern, appropriately focused on manipulation, fraud, deceptive practices. It's just that they're already illegal, and so this bill is unnecessary and duplicative. The underlying text provides strong regulatory and supervisory oversight to prevent these violations, so I agree with the underlying intent to prevent manipulation, fraud, deceptive practices. The good news is they're already illegal, and the underlying bill addresses the concerns the gentleman raised. So I urge my colleagues to vote no, and I'll yield back to you, Mr. Chairman.
Gentleman yields back. The gentleman from California, the ranking member of the full committee, Ms. Waters, recognizes to
I
strike the
move to
last word.
strike the last word.
You're recognized.
This amendment would incorporate strong anti-manipulation language to this bill. Market manipulation in the crypto ecosystem remains a significant concern for many of us. We've seen time and time again how bad actors engage in schemes that impact the value of stablecoins and can lead to what is known as de-pegging. I hope Republicans will honor their commitments from last Congress to Mr. Caston by accepting this amendment. I appreciate the statement that was just made about, oh, this is already taken care of in the underlying bill. That's not good enough. As a matter of fact, if it's synonymous, what's in the underlying bill, then it certainly would cause no harm. It would just reinforce. And so I would expect that the opposite side of the aisle here could simply show some degree of cooperation on an issue such as this that really does no harm, but rather enforces the fact that we're all concerned about manipulation. I would ask for an aye vote on the amendment. I yield back.
Gentlewoman yields back. Is there further discussion on the amendment? I'll recognize myself for 5 minutes just to reiterate that I agree with Chairman Stile on this fundamental practice is certainly embedded in federal law in the oversight of this act. But I also acknowledge and recall our discussion last year as we discussed FIT 21 and stablecoins in that committee markup, that we are, we'll take this language, certainly work with you on it as we think about the bill text, and also take it into account as we think about drafting the FIT 21 2.0 bill, which this committee will consider in the next few weeks. And so we will continue to work with my friend from Illinois, but I do urge our colleagues today to reject the amendment as it is today, and I yield back.
Mr. Chairman?
Yes, Mr. Lynch, strike the last word.
I rise in support of Mr. Caston's amendment, and I yield my time to Mr. Caston.
Yeah.
Thank you, Mr. Lynch. I want to just quickly comment on my friend Mr. Stiles' comment. it's fine to say something's illegal, but saying that something's illegal while you fire the sheriff it creates an enforcement problem. And there's a lot of things that happen in the crypto ecosystem that are illegal. You know, having the broker and the dealer and the exchange all being the same people issuing tokens, wash trade, and all that's illegal. But if we're not beefing up the enforcement agency, then we are not actually making it less likely to do that crime. And of course, some of the challenge with crypto is that these transactions are so fast and so immediate and so easy to hide the paper trail that we are inviting more crime. The analogy that I would use is I would encourage everybody, for a whole lot of reasons, go rent Beverly Hills Cop. German bearer bonds as a tool to facilitate money laundering is illegal. The Beverly Hills Police Department knew it was illegal, but they didn't have the enforcement arms to go through and prosecute that crime until they drew on some resources from the Detroit Police Department, who sent out a young man to come out and help them crack that case. What we find here is a situation where we're saying, right now the Beverly Hills Police Department has jurisdiction over this, that being the SEC. We're going to say this stuff is illegal, but I'm going to move this all to the jurisdiction of the town I live in, Downers Grove Police Department, much smaller town. Good police officers, don't get me wrong, they're good friends, but they don't have the resources. When we're taking this out and we're saying we're not going to use the SEC, but we're going to move this into the CFTC that's maybe a tenth the manpower of the SEC, saying that it's illegal while you're simultaneously getting rid of the police department is not a way to limit crime. So if we care about this stuff, if we don't want these markets to be manipulated, then let's include this amendment, and I hope that at some point we can also make sure that we beef up the number of Axel Foleys out there that can go and shut down this crime. Thank you, and I yield back to Mr. Lynch.
Gentleman yields back to Mr. Lynch.
If there are no other members that need time, I will yield back to the chair. Thank you.
I'm a sucker for an Eddie Murphy analogy, so I thank the gentleman from Illinois. Is there further discussion on Mr. Caston's amendment? The gentleman from Wisconsin.
Chair, I move to strike the last word.
Gentleman recognized.
Many of the benefits of
Hold it,
blockchain.
You've already spoken. The gentleman from Ohio.
Move to strike the last word.
Gentleman's recognized.
I yield to the gentleman from Wisconsin. Well, as fitting as the analogy is, and a good one, as Mr. Stiles pointed out, it is already illegal. There are cops on the beat, and frankly, far more responsible than where Gary Gensler was basically just putting everyone in jail that he didn't like. I yield back.
Gentleman from Ohio yields back. Is there someone seeking recognition on the Caston amendment? If there's no further debate, the question now occurs on the amendment offered by the gentleman from Illinois. All those in favor, please say aye. Aye. All those opposed to say nay. Nay. Opinion of the chair, the nays have it. The nays have it, and the amendment is not adopted. The gentleman requests a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, action on this amendment is postponed. Is there an additional amendment to Mr. Stiles' amendment of nature of substitute? Mr. Caston? We'll pause for its reporting.
The chair is calling for you to visit.
Oh,
Mr. Chairman, I reserve a point of order.
The gentleman reserves a point of order. The clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Caston of Illinois, designated as 35.
Without objection, the amendment will be considered as read. And my good friend from Illinois, Mr. Caston, is recognized for 5 minutes in support of his amendment.
Thank you, Mr. Hill. So this amendment would require stablecoin issuers with more than $1 billion in assets to prepare an annual financial statement, undergo a formal audit by an independent public accountant, and submit such statements and audits to applicable federal or state regulators. This is comparable to audit requirements for FDIC-insured financial institutions. Now, currently, under this bill, stablecoin issuers would have to prepare monthly reserve reports that are examined, that's the term of art in the bill, by an accounting firm registered with the PCAOB. Examined is not the same as an audit, and it's worth talking about this distinction. Stablecoin issuers have issued and continue to issue reserve reports. That's to demonstrate that they have sufficient collateral to back the total number of stablecoins in circulation. But these reserve reports only represent a snapshot of an issuer's balance sheet at a particular moment in time. The analog I'd make to all my colleagues here, because it's the beginning of a new quarter, which means that all of us were probably spending some part of the last few weeks going out and trying to raise as much money as we could into our campaign accounts. And we all did the thing that we all do where we defer making payments because we want to show as much cash on hand at the end of the quarter. That's fine. You also wouldn't catch that in the absence of an audit that's going through and looking at what your actual practices are that you're using. An audit is a different beast because those examinations don't review the underlying data to confirm whether the issuer's claims about its reserves are materially accurate. They don't express an opinion about the adequacy of reserves or financial stability. They don't measure the effectiveness of a stablecoin issuer's internal controls or governance. All that stuff is captured in an audit. And PCAOB has in fact recently warned investors to exercise extreme caution, their words, when relying on reserve reports. Their 2023 advisory said that reserve reports, quote, do not provide any meaningful assurance to investors or the public. And the SEC and PCAOB have pointed out that there are no specific requirements for the terms of these examination engagements. Again, there's a big difference from an auditor. You hire a GAAP auditor, they are going to set the terms. In these cases, the stablecoin issuer is setting those terms. So even if you have the same auditor in two different firms, they may be given different terms and have very different definitions. So it's clear that reserve reports, even with examination, can be unreliable. That is not to suggest that reserve reports aren't valuable. They just are incomplete in the absence of a full audit. So what we're trying to do is, if we're going to make sure that stablecoins are in fact stable, that we staple these examination requirements to a proper complementary audit. In the spirit of bank-like activities, bank-like regulation, I'm hopeful that all my colleagues will support this amendment to put stablecoin issuers and FDIC-insured financial institutions on the same level playing field. Thank you, and I yield back.
Gentleman yields back. Mr. Stile, author of Stable Act, is recognized. Oh, do you continue to reserve your point of order?
I waive my point of order and move to strike the last word.
The gentleman's recognized for 5 minutes.
I appreciate it, Mr. Chairman. Appreciate my colleague's amendment. It brings up an important topic. The Senate bill, our counterpart to the Genius bill, has a similar type framework. They have a $50 billion threshold. The amendment as proposed is a $1 billion threshold for these audit requirements for issuers. I think it's really important to tailor the regulatory burden to the size and scope of the entity. And so open to working with my colleague as we work to take this bill from the committee to the floor. However, I'd urge my colleagues to oppose the bill in its current form, or the amendment in its current form, for the fact that the threshold put forward is too low and onerous. So I appreciate the intent in which it was offered. I'd be happy to continue to work with my colleague from Illinois on the topic. He brings up an important point, an important topic, something I'm willing to work on, but I'd urge my colleagues to vote no on the amendment before us.
Would the gentleman yield just for a quick response?
I will yield.
So I think there's a structural issue of, are these going to be regulated essentially as deposit-taking institutions that are earning interest on the money and are able to play with that money or not? The $1 billion threshold is to tie this to the FDIC rules because we don't want to create an arbitrage opportunity in between. We got plenty of examples with Tether specifically, right, where they're taking deposits, they're loaning those out. Nobody's got any clarity about what the heck is inside Tether. They've never provided an appropriate audit. And if we're going to maintain a structure within the overall piece of this bill where stablecoins are not at the end of the day very stable and very boring, then we need to make sure that we've got thresholds that are no different from what we have inside banks where they're hypothecating assets, they're loaning them out, there's less liquidity in there. So I think as it sits right now, given where some of the other amendments sit, we should make sure that this aligns with the FDIC rules. Maybe there's another scenario, but that would require a lot more surgery to this bill to get to a point where we aren't just creating an arbitrage opportunity for anyone between $1 and $49 billion.
I'll reclaim my time. I appreciate the concern. I think directionally, I'm aligned with what you're generally trying to do. I would note that there's significant differences here because these aren't deposits that are being rehypothecated. We're not talking about banks. We're talking about stablecoins in the context of a payment tool. And so while I appreciate the intent in which the amendment is over, I don't think that analogy is an exact correlation to the issue that we're addressing. Again, to the core concept of tailoring the regulatory burden to the size and scope of the entity. I am of the view that the threshold is offered by my colleague is too low. Again, I note the Genius Act on the Senate side has a similar structure as it approaches about $50 billion. Again, open to continuing this dialogue as this bill moves into final form, enters the floor, or goes forward. I will yield to the chairman of the full committee, Mr. Hill.
I just want to thank the two of you for your discussion of this. I think setting solid audit standards in this regard are merited, and I hope that you guys would work together on the style of those audits and a dollar amount. I understand my friend from Illinois, why he's suggested the amount, and look forward to working with you on that, and thank you for the colloquy.
Mr. Chairman?
It's my time. I'd be happy.
I thought you were done. I'm sorry.
No, I yield back to the chair.
Gentleman yields back. Who seeks recognition?
Mr. Chairman?
The gentleman from Massachusetts, Mr. Lynch, recognizes
you.
to strike the last word.
That's a interesting, first of all, I want to support Mr. Caston's amendment. I think audits are absolutely necessary, given the opaqueness of some of these systems. What I worry about as well is that as a stablecoin issuer decides what architecture to use, if they choose a public permissionless blockchain, it will be, first of all, it's impossible to figure out who is behind each node because those are, in many cases, anonymous. They're often bad actors. So you question whether the efficacy of an audit, whether it's adopted within the bill, will be possible. Because, and this goes to another amendment that I have, but right now, an issuer could just establish a public permissionless blockchain where we don't know who these people are, and there's no requirement for them to cooperate with an audit and to get at what's behind the reserves and who the parties are. So I certainly support the idea of an audit. I just without a requirement that it be a permissioned blockchain where people actually know who each node is, and there are legal recourses against those individual node operators if they don't cooperate in a lawful way, in a legal way. It could be, there could be recourse there. So just want, I do support the ongoing discussion between the chairman of the committee and Mr. Caston, but I do want to point out some of the other operational difficulties that might exist beyond that, beyond the fact of the audit itself. And unless Mr. Caston needs my time, yeah, I'll yield my additional time to Mr. Caston.
Thank you, Mr. Lynch. I just want to raise just one point about this size threshold. Let us presume for a moment that somebody says, I'm a $49 billion asset under management stablecoin, therefore I'm not subject to compliance. How do you know that? Well, because I brought in somebody to examine my reserves who, subject to my own rules, said it was 49 billion. Was it audited? No, I wasn't required to. The $49 billion is a lot of money, right? So we have an unaudited number, and now what happens if that entity is sitting there saying, well, my reserves are actually not what they claim to be? All of a sudden, there's a run on that stable coin, and that very quickly leads to contagion and wherever their other banks are and how you get this through. It seems to me that asking a $1 billion institution, which is not, this is not a tiny institution that can't afford to hire an auditor, right? Much less a $49 billion institution to say, get an auditor to say that if you're going to tell us the size of your operation, then we'll make a decision. I don't know how we would ever trust somebody says, I'm less than 50 billion and just trust me because I set the rules of my own valuation metrics. So I don't think this should be super complicated.
Will the gentleman yield?
I yield back to.
Of course, yeah.
I would note, just for the record, the bill has monthly attestation requirements to be certified by a CPA. So I think it'd be maybe misleading to say that there's no requirement. Then the question is, how do we scale the regulatory burden to the size and scope? Again, more than willing to work with my colleague as to what is the appropriate size and scope. We could dialogue that. I'm of the personal view that the threshold offered by my colleague is too low. But I think it would be an inaccurate statement to say that there's no requirement. The requirement is simply scaled. So it'd be a monthly attestation requirement to be certified by a CPA, a lower standard than an audit, as noted. That's correct. But the threshold for the audit, as suggested by my colleague, to me is too low. I'm encouraging people to vote no. But I am very open to engaging in an analysis and a dialogue with my colleague to find that appropriate threshold. And again, I note, just for sake of comparison, our colleagues in the Senate found 50 billion to be an appropriate number. So look forward to the conversation working with my colleagues, and I'll yield back to you, Mr. Lynch.
Yeah, thank you. Perhaps our colleagues in the Senate were anticipating Meta or somebody coming in big there. That's why they put the 50 billion mark on that. But again, Mr. Caston, do you need more time? Okay, then I yield back, Mr. Chairman. Thank you.
Gentleman from Massachusetts yields back. Who seeks recognition? Appreciate that discussion. If there's no further debate, the question now occurs on the amendment offered by Mr. Caston from Illinois. All those in favor, please say aye. You want to say aye now?
Aye.
Those who oppose the amendment say nay. Nay. Independent chair, the nays have it. Nays have it. The amendment is not agreed to.
Request a recorded vote.
The gentleman from Illinois requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the committee rules. Further proceedings are postponed. Is there an additional amendment to Mr. Stiles' A&S?
Mr. Chairman.
Gentleman from Massachusetts.
Thank you, Mr. Chairman. Mr. Chairman, I have an amendment at the desk.
We'll pause and have it distributed.
Thank
I was waiting, amendment standard in gap is 5.
Mr. Chairman, I would like to reserve a point of order.
From Wisconsin reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 28.
Without objection, the amendment will be considered as read, and Mr. Lynch is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. This amendment would simply require stablecoin issuers to issue their products on permissioned blockchains. Just to elaborate a little bit, permissionless public blockchains, which some of them use, many of them use, are databases that are hosted on multiple different computer servers, each of which is known as a node. Instead of having one centralized entity host and maintain the database, each node runs software that allows it to host a version of the database. Permissionless means that any computer running the necessary software can become a node. There's no identification or vetting involved, which is a problem. Transactions are carried out by updating the database, but because it's quite plausible that a node could be a bad actor, nodes need to be discouraged from approving problematic transactions like double spending or transferring assets to themselves. Public permissionless blockchains rely on game theory-based consensus mechanisms like proof of work or proof of stake to discourage such behavior. So, Mr. Chairman, this amendment would require stablecoin users to issue their products on permissioned blockchains. Stablecoins are built on permissionless blockchains technology right now, meaning anyone with the right software can join the network and become part of that blockchain. This open access structure, while innovative, also comes with very serious risks. The lack of identification and vetting of participants creates a dangerous avenue for illicit activities like money laundering and sanctions evasions. These blockchains do not operate in a vacuum. They require constant vigilance and maintenance to safeguard against security flaws that could compromise the entire system. In light of these vulnerabilities, permissionless blockchains should not be the foundation for any financial services, especially one as critical as stablecoins. We need to move toward permissioned or private distributed ledgers for these types of transactions, and by using a permissioned blockchain, we can ensure that the entities involved are accountable, they're identifiable, and subject to regulation and oversight that is essential to maintain the integrity of our financial system. With that, Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition?
Mr. Chairman, I waive my point of order and seek to strike the last word.
Gentleman's recognized for 5 minutes.
Many of the benefits of blockchain, including kind of the resilience, the openness, resistance to falsification, don't apply in the same way, to the same extent in permissioned systems. And so by forcing a choice of blockchain, you're not only taking away the decision from innovators and consumers, but also limiting blockchain future development as open public ledgers. So it really goes at the core of the bill. Indeed, one of the primary value propositions associated with blockchain technology is that it's transparent and open source. Anyone with an internet connection can view and audit the digital ledger of transactions. So if the Stable Act were to require permissioned blockchains, this transparency and accessibility would actually be lost. So Congress shouldn't be in the business of picking winners and losers in technological innovation. And I think we want to remain technology neutral. Moreover, legally mandating permissioned blockchains locks out other innovations, including decentralized, transparent, and open solutions. Technology, it's evolving quickly. As we know, it requires specific design in law, specific design in law ages poorly and reduces flexibility. So nothing in the Stable Act prevents a payment stablecoin issuer from issuing their assets on a permissioned blockchain. That's still available. If the market decides that permissioned blockchains are more desirable than permissionless blockchains, the bill allows for it, gives it that flexibility. However, Section 5A3BI2 does not let regulators deny applications because stablecoins are issued on an open, public, and decentralized network. And so I think at its core, I disagree with my colleague's approach here. I think at its core, we want to let the market decide what type of blockchain payment stablecoins, what type of blockchains, payment stablecoins should be issued on. And so I don't think you want the heavy-handed approach that I think my colleague's amendment would bring. I think it would stifle innovation. And accordingly, I'm going to urge my colleagues to vote no on my colleague's amendment. Mr. Chairman, I'll yield back.
Gentleman yields back. Who seeks recognition? If there's no further debate, the question now occurs on the amendment by the gentleman from Massachusetts. All those in favor, please say aye. All those who are opposed, say nay. Nay. Pending chair, the nays have it. Nays have it. The amendment is not adopted. Okay. Is there additional amendment?
Yes, please. Recorded vote, please.
The largesse of the chair will permit that.
Thank you. I appreciate it, Curtis.
Recorded votes requested. All those in favor, raise your hands. Sufficient number have raised their hands. Recorded votes. So order pursuant to subsection C, 5 of Rule 3 of the committee rules. Further proceedings are postponed. Is there further amendment? Mr. Castett.
Amendment at the desk.
Amendment at the desk. We'll pause for bid to distribute.
Mr. Chairman, I reserve a point of order.
Mr. Style reserves a point of order. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Caston of Illinois, designated as 39.
We will consider the text as read, and I would now yield to my friend from Illinois for 5 minutes to explain his amendment.
Thank you, Mr. Hill. So this amendment, when we drafted it last night, and then I got in here as we're bouncing in and out, and I was listening to your exchange with Mr. Foster, and I was thinking I didn't do my homework properly. But I think this amendment is still necessary, and I'm hoping in the exchange we're both in agreement on it. This amendment would limit bank deposits that are eligible as collateral for stablecoins only to those that are insured. This is to protect stablecoin holders' funds during times of market stress and mitigate financial stability risks that a potential run on a stablecoin could cause. Under the current text of the Stable Act, stablecoin issuers would be permitted to invest in assets that are not particularly safe, including uninsured bank deposits. Specifically, page 14, line 16, bill says, quote, funds held as demand deposits at insured depository institutions are eligible to act as collateral, but doesn't state that those deposits have to be insured, meaning that uninsured deposits are also allowed. Now, in a prior draft of this that was posted on the Republican Committee's website on February 6th, it did actually say insured demand deposit, so I don't know if that was an oversight or a strikeout, but I'm hoping that we can get that back in, which would seem consistent with the spirit of the colloquy that you had with Mr. Foster earlier. Stablecoin reserves in the form of uninsured deposits, we know, can create systemic risks because of the panic that occurred when Silicon Valley Bank failed. At the time of that failure, as we discussed earlier in this hearing, Circle held $3.3 billion of uninsured deposits at SVB, which represent a large portion of USDC's total reserves. The value of USDC dropped to 88 cents after they failed, bounced back only after they were bailed out. So we are in a world right now, if we keep the text of the Stable Act as written, where USDC is only considered to be stable because the taxpayers bailed it out, and I don't think any of us want to continue that definition of a quote-unquote stablecoin. Now, the Republican witness at the hearing for this a month or so ago only mentioned algorithmic stablecoins as a risk, but I just want to stress that that is disingenuous. There was a 2023 Bank of International Settlement study of 60 stablecoins, including prominent ones like Circle and Tether, and they found that they had all lost their price peg at least once. That's the opposite of stable. Every single one of them had lost their price peg. Now, that is because when investors have doubts about these reserves, they move to quickly redeem the tokens. That can create runs that collapse the price of the stablecoin and cause market contagion. FSOC has called attention to these run risks, warning that, quote, stablecoins continue to represent a potential risk to financial stability because they are acutely vulnerable to runs. Former Treasury Undersecretary for Domestic Finance, Nellie Lang, recently said, quote, for stablecoins to function and not cause or pose risks to financial stability, reserve assets have to be very safe and very liquid. There's a second problem that is also currently in the Stable Act, but it's the exact same problem. The Stable Act also says that stablecoin reserves can include Eurodollars, which are US dollar denominated deposits held at foreign banks. Page 21, lines 18 through 21, directs federal and state payment stablecoin regulators to establish requirements regarding approval for foreign depository institutions to hold deposits as collateral. There is nothing in that section that requires those deposits to be insured. And as we know, the Eurodollar market generally is not insured. It's estimated to have total outstanding value of about 13 trillion with a T dollars. Last year, former SEC Chair Gary Gensler warned that much of that 13 trillion is in U.S. currency held offshore by U.S. banks is in fact uninsured. He'd emphasized that Eurodollar markets have played a role in deepening economic downturns across the globe, including the 2008 financial crisis. So if we can agree, as I think the colloquy with Mr. Foster and Mr. Hill played out, that we need to make sure that that cash assets underlying stablecoins are insured, then FDIC deposit insurance plays an important role in promoting financial stability. And we also need to make sure that a run on US dollar denominated deposits at global banks is not possible. Federal government has incurred significant costs in rescuing uninsured depositors during financial crises many times, 1980, 1992, 2007, 2009, 2023. This bill would invite future taxpayer bailouts, and I don't think any of us want to say that we were here, we were warned, and we chose not to act. So I hope we'll heed these warnings from our regulators, apply these lessons, and just make sure that cash deposits that are used as reserves for stablecoins are in every case insured. Thank you, and I yield back.
Gentleman yields back. Who seeks recognition? Gentleman from Wisconsin.
I'll also waive my point of order.
Gentleman waives his point of order. He's
Move
recognized
to
to
strike the last word. Thank you, Mr. Chairman. This is really taking us back to the previous discussion with Dr. Foster. So Section 4A of the Stable Act includes the following as permissible reserve assets. I think it's just let's stage set here. So demand deposits or other deposits that may be withdrawn at any time, held at insured depository institutions subject to limitations established by the FDIC and CUA, respectively, to address safety and soundness risks of such insured depository institutions. So this means that for insurers holding deposits that exceed the deposit insurance limits, they'll be subject to rigorous requirements. So let's think about that. First, the FDIC and the NCUA determine how much in uninsured deposits they're able to hold to help avoid uninsured deposit concentration risk. Second, issuers face reserve asset diversification requirements under the joint federal rulemaking. So this would include requirements covering the amount of deposits an insurer is able to have at a single depository institution. And then third, insured depository institutions already have deposit concentration risk requirements that limit how many deposits they're allowed to hold from a single customer. So if we establish that issuers were only able to hold insured deposits, they'd have to do so with the help of a deposit sweep network, resulting in frictions to redemptions that could actually leave consumers worse off. And so furthermore, my colleagues struck the ability of insurers to hold their reserves at foreign depository institutions. One of the benefits of stablecoins is their ability to be used abroad to process global payments. Section 4 of the Stable Act gives our regulators the ability to jointly determine which jurisdiction or institutions would be appropriate for issuers. So this amendment, in summary, is unnecessary and impedes the payment stablecoin ecosystem from reaching its full potential. So I would urge my colleagues to oppose the amendment as drafted, and Mr. Chairman, I will yield back.
Gentleman yields back. Who seeks recognition? Mr. Foster of Illinois.
Yeah, I'd just like to, this point about.
Recognize and strike the last word.
Yeah, strike the last word. Just in response to the gentleman's discussion previously, it doesn't seem like a bad thing for the consumer if these things are put into sweeps that spread the stablecoin reserves into multiple insured accounts. It seems, it's regularly done. It is very inexpensive, and it means that you're not going to have one stablecoin that will be shakier than another one and will presumably trade differently than those or behave differently under stress. It's a well exercised model to do that, and I don't see what's the objection to it. There'll be a small fee associated with it. It will make the issuer slightly less profitable, but it seems like that is a very small risk compared to having limited numbers of uninsured deposits. I'd be happy to yield.
I'll take the moment there. I think what we're looking at is the resulting friction to redemptions that would exist. And I think the second point is the underlying amendment struck the ability of insurers to hold reserves at foreign depository institutions. And again, one of the core concepts of this is people's ability to use a U.S. dollar-backed stablecoin on a global basis. And so there's layers of risk management in the underlying text of the bill. So I wouldn't want to walk away and say that there's none if we don't take this. There's a robust layer of risk management, kind of as laid out by me, from the FDIC, NCUA, reserve asset diversification, insured depository institutions have deposit concentration risk requirements. And so there's layers of risk avoidance in the underlying bill. I just don't think that the layer that's being offered in the underlying amendment outweighs the burden it places in the friction that it would pose in the system. Yield back.
No, I understand, but I think, the friction is going to be a very small impact on the overall profitability of the issuer, and so that doesn't seem to be a major objection to this. I should mention, I'm going to be offering a simpler version of this that simply, we've had some confusion here in this hearing. The chair has said, I believe repeatedly, that only insured demand deposits are accessible. So I'm going to have a similar amendment that will just insert the word insured where relevant. And that should clarify whether or not only insured deposits are here. Anyway, that was my comment. And, can I yield to Representative Caston?
Thank you, Dr. Foster. I just want to point out that if, in fact, there's already all sorts of belts and suspenders in here, it does raise the question of why the February 6th draft was modified, because the February 6th draft that we were first reviewing said insured demand deposit. So there was a decision made by the Republicans here to take that out, and we're now arguing that what's there directing the executive branch to fix this is going to cover that. I would argue in this Loper-Bright era, we should be clear about our intent, not count on the regulators to figure out what we meant. And if I was a bank who was trying to take advantage of this, I'd say, well, they had that language and they didn't put it in there, so clearly that wasn't Congress's intent. Put the language back in. And with respect to Eurodollars, look, I get it. We could make lots of parts of our financial system much bigger, much faster if we took off the brakes. That in and of itself is not valuable. Why would we say that these are stable if we are going to allow the cash that we are depositing to be in a place where we don't know if it's there when we need it? An uninsured deposit in a U.S. bank is no different from an uninsured deposit in a European bank. If it ain't there, it ain't there. And therefore, it's not stable. And again, we learned this lesson with SVB on this committee. Most of us in this room were here. Most of us remember that point where, I think it was the weekend, we all got pulled over on the side of the road talking to the FDIC and the Treasury saying, holy smokes, this bank is melting down. We have to inject a bunch of money into it. What did we learn from that? If what we learned from that is let's do it again, it's a mistake. This seems like common sense. Yield back to Mr. Foster.
Now yield back.
Gentleman yields back. Who seeks recognition? Mr. Lynch.
And I certainly support Mr. Caston's amendment. I think it's common sense, and it could avoid much of the damage that we expect if one of these stable coins breaks the buck. However, there's also another part of this, which is that the underlying legislation also permits the merger of banking and finance. Banking and commerce. It allows, it basically is unlimited.
We pumping, chat. We pumping, chat. What's going on? Is this the news we need, chat?
For a very, very long time in this country, that was something that Congress was very careful about and very protective of depositors and protective of the integrity of our financial system. And that's going away in this bill. That's going away. We're blowing it up. So that someone who actually is creating currency out of thin air can also engage in any level or extent of commercial activity, including the biggest players, including Meta and Amazon and X and everybody else. So it really, we're looking at the likelihood that some source of volatility will cause these one or more of these stable coins to break the buck. I think that's automatic. That's going to happen. And so I think what Mr. Caston is wisely trying to do is to limit the damage that might be caused, or the likelihood that one of those unpegging event occurs. So I appreciate his thoughtfulness on this, and I hope members will support his amendment. I yield back.
Gentleman yields back. Who seeks recognition? There's no further debate. Question now occurs on the amendment offered by the gentleman from Illinois. All those in favor, please say aye.
Aye.
Any opposed, say nay. Nay. Opinion of the nays have it. The nays have it. The amendment is not agreed to.
Request a recorded vote?
Record vote is requested. All those in favor of record vote, raise your hands. Sufficient number having raised their hands, record vote is so ordered. Pursuant to Section C5 of Rule 3, the committee rules for proceedings are postponed. Is there further amendment? Mr. Ricardo, recognized.
Thank you, Mr. Chair. There's an amendment at the desk.
We'll pause and let the amendment be distributed.
Thank you. It's the one numbered 010. Thank you. This is
Mr. Chairman, I reserve a point of order.
I think we've passed out the wrong amendment.
okay.
You gave me a Foster amendment, not a Ricardo amendment.
Criminal penalties? Yeah, no, this is the right one. If it's criminal penalties. Huh? Criminal penalties? Yeah.
Yeah, Ricardo. Yeah. This is Ricardo in Section 3.
Should be 010.
Got it, yeah. I'm here till midnight. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Liccardo of California, designated as 1010.
Without objection, the amendment will be considered as read, and the gentleman from California is recognized to explain his amendment.
Thank you, Mr. Chair. Currently, this draft of the bill contains no criminal sanction for the unpermitted issuance of a stable coin, and the current provisions for civil penalties would penalize a violation for up to $100,000 per day. That's under Section 3B3. Obviously, there's concern with regard to this Section 3 around extraterritorial enforcement. The largest stablecoin company in the world is headquartered in El Salvador. And to my knowledge, I don't believe El Salvador is the beacon for sound financial management globally. We should be concerned about this, as well as other companies elsewhere in the world. There are criminal penalties in other parts of this bill. Specifically in Section 4, it criminalizes submission information that doesn't fairly present financial status for monthly certification by a CEO or CFO. Section 4 criminal penalties here, but not for this particular violation, which is the unpermitted issuance of stablecoin. Now, the Senate version does contain this language that would impose criminal penalties for unlicensed issuance. It is of particular concern to me because as we think about what the civil penalties are, up to $100,000 per day, and you consider just the profit last year made by that one company headquartered in El Salvador, Tether, $13 billion last year, $6 billion in the fourth quarter alone. So if Tether wished to operate in an unpermitted state, it could do so at a cost of $9 million for a quarter, in which it earned $6 billion profit. Let me be clear about that. That was profit, not revenue, but net revenue, profit. So to take Mr. Caston's Beverly Hills Cop analogy one step further, if the civil penalty for moving some billions of dollars of German bearer bonds with a $6 billion profit was only a $9 million civil penalty, I think most crooks would take that risk. Certainly not suggesting that's the case with this company, that they're in any way crooked or they're intending to be unpermitted. The point is, there is a great temptation for anyone to operate well beyond the bounds of the law. And so I would like to see some more significant penalty imposed here if we're going to ensure that everyone's operating lawfully. Now, I guess through Mr. Chairman, I know that Mr. Stahl and I have had some conversations, and I'd certainly welcome colloquy. I have been informed that there may be some consideration around penalties, and I'd certainly welcome Mr. Stahl's.
Will the gentleman yield?
Yes.
First, appreciate your engagement on this bill. It's been constructive. Log as it relates to Section 3. And so with that commitment, I would ask if the gentleman would be willing to withdraw his amendment as we work to further refine the bill in this section in particular prior to floor action.
Chair. Yes, I would be willing to withdraw. I certainly can see where the votes have been going. I would also suggest, I think, in negotiation with the Senate, should this pass, as I expect it will in the House, there'll be an opportunity for us to revisit this.
I appreciate that and look forward to continuing to working with my good friend from California.
I'll ask for unanimous consent, then withdraw.
The gentleman's amendment is withdrawn. I appreciate the colloquy and the willingness to work together on this important proposal, and I thank the gentleman from California for it. Is there further amendment? Good. Mr. Foster is recognized.
This is for a new amendment?
The one that was previously passed
I
out?
have an amendment at the desk, yes.
It's at the desk. We'll pause for, I think it's been distributed. May I ask the clerk, no? Yeah, that's what I've got. Yeah. Okay, got it. Pause while the clerk distributes Dr. Foster's amendment.
Mr. Chairman, I'd like to reserve a point of order.
Gentleman from Wisconsin reserves a point of order. The clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Foster of Illinois, designated as 22.
I thank the clerk. The amendment will be considered as read, and I now call on the gentleman from Illinois, Dr. Foster, to explain his amendment.
Very briefly, my amendment is simply sort of a stripped-down version of Representative Caston's
appreciate it, gentlemen. I just would, I said to Mr. Caston, I would say to my friend, if he'll yield to me, that, we'd love for our staffs to work with you on this section and make sure everyone on both sides of the aisle fully understands how the banking industry has recommended that this be done for safety and soundness purposes, and make sure you understand the existing authorities in the draft about the limitations that the bank regulators are going to impose as well. So I'm not asking you to withdraw the amendment, but I am explaining to you that I think we ought to have some conversation about it. I'm happy to put it up for a vote again, but I think that would be helpful to you and Mr. Caston as well.
Yeah, so,
I'll yield back to you.
yeah, thank you. And, yeah, I guess at this point, well, let's proceed, but I intend to put it up for vote. It'd just be useful to have everyone on record here.
Yeah. The gentleman yields back. Who seeks recognition? If there no further debate, then the question now occurs on the amendment offered by Dr. Foster. All those in favor, please say aye. Aye. Those opposed, please say nay. Nay. In the event the chair, the nays have it. The nays have it. The amendment is not adopted.
Request a recorded vote.
Recorded vote is requested. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. Is there further amendment? Hearing no further amendments, the question now occurs on ordering the bill as amended, reporting to the House with a favorable recommendation. Those in, Mr. Chairman? I've asked twice, but I'll now yield to the gentleman.
We have a vote. I don't know, it just went radio silent there. I didn't understand what you were talking about.
I was looking for something, but we didn't go radio silent. I asked if there was any more amendments, and I didn't hear anybody say anything.
Yeah,
Okay.
I do, yeah. Thank you.
Gentleman's recognized for 5 minutes. Or,
I believe I have
an amendment at the desk.
Yes, yep.
Wait for the clerk to report it. Clerk report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 20.
Without objection, the amendment will be considered as read. Gentleman from Massachusetts recognized to explain his amendment.
Thank you, Mr. Chairman. This amendment would prohibit all foreign-issued stablecoins from being offered or utilized in the U.S. absent authorization. To safeguard the integrity of our financial system, we must ensure that foreign actors are not able to bypass U.S. regulations and potentially compromise our economic stability. Many of my colleagues also share the concern that if this bill were to become law, there is little to prevent large foreign issuers such as Tether from continuing to operate outside U.S. law, playing by its own rules and undermining the very regulatory framework that we're trying to establish here tonight. I also have grave purpose of this bill. Additionally, Tether has repeatedly been at the center of reports linking it to illicit activities, including being a preferred financing method for terrorist organizations and sanctions evaders. This is not a risk we can afford to ignore. If foreign issuers are allowed to operate freely in the U.S., they could continue to exploit the system to facilitate these dangerous activities. According to the Wall Street Journal, which has reported extensively on the abuse of digital assets by Russian middlemen to evade sanctions and trade for billions of dollars worth of weapons parts, quote, for Vladimir Putin's war machine, Tether has become indispensable, close quote. Russian companies have specifically relied on StableCoin to procure drone parts and other high-tech equipment for Vladimir Putin's invasion of Ukraine, with Russian middlemen converting rubles into Tether and paying out local currency to foreign suppliers in China and the Middle East. Our prior oversight work on this committee has evidenced the same. Just last December, we learned that Treasury's Office of Foreign Asset Control sanctions several individuals and entities associated with the TGR Group. This international money laundering network used Tether and other stablecoins to facilitate illicit activity and sanctions evasion on behalf of Russian elites. If this committee wants to maintain a transparent, secure, and accountable U.S. financial market that is the envy of the world, then we need to ensure that foreign actors do not undermine our system. Allowing foreign-issued stablecoins like Tether to operate without proper oversight would only expose American consumers to financial harm, but it would enable bad actors to continue exploiting loopholes in our regulatory framework. So I urge my colleagues to support this amendment to ensure that foreign-issued stablecoins cannot be used as a backdoor to circumvent the regulations that you are working to put in place. This is about making sure that the U.S. remains a leader in financial regulation and that our financial system is not compromised by those who operate outside of our laws. So if we are to pass this bill, it would be great if it actually applied to all stablecoins and that for those that would not comply, we keep those outside our borders. It's not outside of what you've already considered in the main bill. It just it harmonizes, I think, our national interest with the purposes of the bill. Thank you, and I yield back.
Gentleman yields back, who seeks recognition. Did you reserve a point of order?
I will withdraw my point of order.
You didn't reserve one, but I'm going to assume that you reserved one and then you just withdrew it. Is that fair?
I reserve and withdraw,
There you go. Thank you.
and I would move to strike the last word.
The gentleman from Wisconsin has withdrawn a point of order, and he is recognized for 5 minutes.
I thank the chairman. I think it's worth noting that in the United States, we have a history of allowing foreign firms that are from countries with substantially similar regimes to the U.S. not be able to operate in the United States. And so as we leave stablecoins and we think about other financial services spaces, we can think about the banking sector where RBC, Royal Bank of Canada, is able to operate with integrity in the United States. And so as we look back at how we structured the stablecoin bill, the amendment as offered would not allow any person to, I'm going to quote this, would not allow any person to, quote, transact using a payment stablecoin through the use of any medium or by any means of access to interstate commerce, end quote. So it would
in extraordinary circumstances. I think that additional check and balance will further allow the Stable Act to thrive and allow digital assets to thrive in the global economy while making sure that the U.S. is still the best place to start and to build a business. And I appreciate Chairman Hill and Chairman Stiles' willingness to work with me on this, and I look forward to making sure this issue is addressed in the bill that the President's going to sign shortly.
With the gentleman yield?
Yes.
I thank you for raising this issue. I think it's very important that we get the Treasury Secretary's role correct here, and I'll say in conjunction with all the regulatory agencies, because it's in consultation with the stablecoin regulators collectively that make a determination if a nation is comparable to the requirements under the Act. That's the standard. And this is the same kind of standard we use in other cross-border financial regulatory situations, so that we can count on the enforcement and the regulatory standards in the foreign country. And so I think it's important that analysis and that there be an appropriate balance there. So I thank the gentleman from South Carolina for his work on this, and I yield back to him.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. Who seeks recognition? I'll recognize myself for 5 minutes. I want to thank Mr. Lynch for his, I'm sorry, Mr. Chairman, did you want to speak on this amendment? No, well, we're not ready for that yet, just un momento. I want to thank Mr. Lynch for his thoughtful amendment. I think he raises an important point. I think it's shared with both sides of the aisle that we want America to be the name and rule of law as it relates to issuing payment stable coins, and that people want access to the American market. They need to come in and be incorporated here and be subject to American regulation and supervision. And I respect his views on that. I think this certification process that we have of foreign jurisdictions, because I've seen it work in banking and securities, can be made to work in a successful manner. I urge my friend from Massachusetts to engage in thinking about that. The other thing that I note in his amendment, I just would call to his attention, Chairman Stile referenced it early in his initial response, is unlawful for any person. So when we talk about it in an institutional context, in an issuer or a regulated entity under the Act, so an exchange or someone engaged in the business. But as Mr. Stile noted, people can incidentally not be in the business, but would fall afoul of your wording. They could come back, or they could have a business in Argentina. They could be using a non-U.S. stable coin in that business efforts outside the United States, have it in their wallet and seek to convert that back into dollars, for example, in the United States, and they might run afoul of the way your amendment is precisely worded, because they're not holding themselves out doing business, they're just doing it incidentally, which is why we phrased it the way we did in Section 3 of the draft bill. I'd urge my colleagues to work with Chairman Stile if they have suggestions on Section 3. I think it's adequate to enforce the laws, and it does not permit a non-compliant stablecoin issuer to come in to the U.S. and issue or offer stablecoins without being in a jurisdiction that's fully vetted and recognized by the United States. And I'd also just say for our discussion, I don't know of a stablecoin issuer in the state of New York or internationally that's active that would meet the standards under the Stable Act, meaning I think they all have a lot of work to do to meet the full requirements that are contemplated by the Stable Act in order to be fully in compliance. But again, I thank my friend. He and I have worked on illicit finance issues for years together. He raises an important point, and I yield back the balance of my time. But I do urge my colleagues to reject his amendment, and let's work together on Section 3. If there's no further debate, the question now occurs on the amendment from the gentleman from Massachusetts. All those in favor, please say aye. Aye. All those opposed, please say nay. Nay. In opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. Roll call vote's been requested. All those in favor of recorded vote, raise your hands. Sufficient number having raised their hand, recorded vote is so ordered pursuant to subsection C5 of Rule 3. The committee rules. Further proceedings on amendment are postponed. Is there an additional amendment? Mr. Lynch.
Thank you, Mr. Chairman. This amendment would, excuse me, I have an amendment at the desk.
Pause for it to be distributed.
Mr. Chairman. Mr. Chairman, request a point of order.
A gentleman from Kentucky is recognized for a point of order. Oh, you're reserving a point of order.
Reserve a
Sorry, I
point of
thought you had a question. Beg your pardon. Gentleman's reserved a point of order. Clerk will report the amendment. Yep, sorry. Stand by. We have the wrong Sherman amendment. Stand by.
Whatever is easiest. I'm happy to do whatever you guys want. I'm going to cooperate.
Mr. Chairman, I have an amendment at the desk, which I believe is the one they may have been handing out.
The clerk is distributing the amendment.
Yes. Okay.
Okay, so I'm going to go. It's okay, they're going this one, I guess.
Sherman?
Okay, here we go. Shiver.
He's got two back-to-back. I'm doing my two back-to-back, good.
Money laundering. Nope.
It's this one. It's this one. Four more minutes before you.
I'm good. That's okay. I'm surprised it's gone as smoothly as it has. I'm surprised it's gone as smoothly as it has.
They're not going to vote for it whether they read it or not.
Mr. Sherman, you got, it's AML, and then after that is
Mixers.
Right,
Yep,
that's
so
it. You're back to it.
Good.
They're giving the right one. Yes.
The Sherman Amendment has now been distributed. A point of order on the Sherman Amendment has been held by the gentleman from Kentucky, and the clerk will please report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Sherman of California, designated as
Without objection, the amendment is
28.
considered as read. The gentleman from California is recognized for 5 minutes on his amendment.
The crypto universe can thrive only if it is both above and below the water. You see, if it's just a method that's subject all entirely to know your customer and anti-money laundering, it has no particular advantage over the US dollar and a lot of disadvantages, including the price changes every few minutes. So it has to be above the water. A portion of it has to be subject to the Know Your Customer. And then it also has to function below the water without Know Your Customer, so that it becomes a payment system that has a substantial value to some people. Others may use it just because it's there, but it has to have a substantial advantage to the majority of users. That advantage is that the underwater portion will be excluded from the anti-money laundering provisions. Now, this amendment would apply anti-money laundering and know your customer requirements to all persons that transfer payment stablecoins between wallets, including unhosted wallets. So the crypto world isn't going to like this because it deals with the unhosted wallets. And an unhosted wallet, I think, as we all know, is a situation where you're sending the money to a number, but you have no idea who that person is, and there's no way for law enforcement to find out even if they had a warrant. So I can't say that I'm going to get a whole lot of support on the Republican side for this amendment, but this amendment would apply the anti-money laundering provisions to both the hosted and the unhosted wallet. Both the account at Coinbase, where a court order could reveal the information, and the numbered account where nobody knows who it is. So if you have an unhosted wallet and you're unwilling to reveal who you are, then you can't play with the stablecoin, nor can the portion of the stablecoin ecosphere that is above the water do business with you. I think it's a simple amendment, and I'm looking to see if anybody wants me to yield time, and seeing none, yield back to the chair.
Gentleman yields back. The gentleman from Ohio, Mr. Davidson, is recognized to strike the last word.
I thank the chairman. Look, the gentleman's amendment sounds like it protects people, but the reality is the underlying bill already offers the exact same protections. The know your customer obligations are very explicit on stablecoin issuers and frankly the banks that customers would use to move money with their cash to acquire stablecoins. So the know your customer provisions are already there. There are on-ramps and off-ramps. That's where the surveillance is. Individuals aren't complying with the Bank Secrecy Act today. It would require rulemaking for people that aren't even covered directly by it. The Bank Secrecy Act applies to people that operate banks and money service businesses, and the underlying Stable Act requires compliance with those laws. So the protections are in fact already there.
Will the
I
gentleman
urge
yield?
opposition to the bill, and I yield to the chairman.
Will the gentleman yield?
I yield the chairman style.
Okay.
The gentleman is yield back. Does any other member seek recognition?
Can you give me a minute?
Mr. Foster is recognized for 5 minutes.
I'll yield
strike
to
the
Mr.
last word.
Chairman.
Yeah. If the gentleman's right and the amendment is harmless, I would hope that the Republican majority would accept it. If the amendment has teeth and will prevent the use of unhosted wallets to evade the anti-money laundering provision, then I'm sure that all those who support every part of the program of the crypto community will oppose the amendment. So if the strongest argument against this amendment is that it's harmless, I think it would be accepted.
Would
And
the
I'll
gentleman
back to
yield?
the gentleman from Illinois.
I yield back.
The gentleman yields back. Does any other member seek recognition? Seeing none, I recognize myself for 5 minutes on the bill. Requiring FinCEN and KYC of every single self-hosted wallets, not only not really appropriate in this particular legislative vehicle, but it would also really apply bank-like standards to individual Americans making transfers for their own personal and family purposes. It'd be like KYCing every physical wallet with cash in it. It'd be a dramatic invasion of personal liberty. So the good news is with blockchain technology, there's transparency. So law enforcement can leverage the transparency of the blockchain to follow the money between bad actors, but individual Americans should not be treated the same as financial institutions. And so I will be opposing this amendment and happy to yield to my colleague from Ohio if he wishes.
I think the chairman made the point exactly. It wouldn't be a harmless amendment. It would actually create a rulemaking burden on Treasury to somehow find a way to start regulating individuals as if they were banks. And so it's a very bad idea, and I yield to the chairman.
The gentleman yields back. Is there any further debate on the amendment? If there's no further debate, the question now occurs on the amendment offered by Mr. Sherman from California. All those in favor signify by saying aye.
Aye.
Those opposed, nay. The opinion of the chair is the nays have it. The nays have it, and the amendment is not adopted.
On that, I request a recorded vote.
A recorded vote is requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendments are postponed. Is there an
has one?
additional amendment?
Yes, I have an amendment at the desk.
Mr. Sherman has another amendment at the desk.
This is the one that deals with mixers.
We'll pause while the clerk distributes the amendment.
Mr. Chairman, reserve a point of order.
The gentleman from Kentucky reserves a point of order. The clerk will please report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392.
Without objection, the amendment is considered read. The gentleman from California, Mr. Sherman, is recognized for 5 minutes on his amendment.
I think I can get a round of applause in the room by indicating this is my last amendment to this particular bill.
True.
This amendment is quite simple. It prohibits the use of mixers for any of these stable coins, and by the nature of, and of course, being added to the bill, it's authorizing and directing the Secretary of the Treasury to issue the appropriate regulations. What is a mixer? A mixer is there to help make sure that even with a court order, the information is not available to law enforcement. A mixer is there to mix up law enforcement. Who wants to mix up law enforcement? People who are doing illegal things. So if we want the stable coins to play a good role in our society, we would not want them to be subject to use to a mixing device, which is there to confuse law enforcement. I'll point out that just last month, the Trump administration removed sanctions against Tornado Cash, which is a crypto mixer, which was responsible for getting U.S. dollars to terrorist organizations. I hope that we would, there is no legitimate purpose of a mixer unless you think it's legitimate to hide transactions from the court system, including family law, where spouses are fighting about money, or you think it's legitimate to evade law enforcement, including the IRS when they have a warrant. And if this is a chance for people to show whether they're on the side of law enforcement or on the side of those who can make money by designing a tool which is usable in a mixer system, the sole purpose of which is to evade U.S. law and to promote and facilitate criminality. With that, I'll look around. I see nobody asking me to yield time, and I yield back to the chair.
The gentleman yields back to the gentleman from Kentucky insists on his point of order. The gentleman withdraws his point of order. The gentleman from Ohio, Mr. Davidson, is recognized for 5 minutes to strike the last word.
I thank the chairman. Mixers sound okay until when you listen to Mr. Sherman, but the reality is there is a legitimate use case. When you have a checking account, and in the old school days, you would write longhand the checking account. It had your routing number and checking account number. That was a security risk, so people have diminished checks, but it didn't reveal how much money you have in your bank account. The reality is, because a public blockchain is there, it's knowable how much is in the wallet that the money was transferred from. So you wouldn't want to necessarily reveal how much money you have. So what the gentleman refers to as mixing is simply sometimes taking a wallet that has a significant amount of money in it and mixing it so that you move it into a smaller wallet, so you're only paying the $200 for the service and not revealing that you might have, $10,000 in the wallet that it was moved from. So it is a useful purpose for legitimate uses by law-abiding citizens, and it shouldn't be undermined by the gentleman's amendment. And I yield to the chairman.
The gentleman yields back. Does any other member seek recognition? The incorrectly nameplate labeled Mr. Caston from Illinois is recognized.
Mr. Caston, Ms. Waters, whatever you'd like to refer to me as. Thank you, Mr. Chairman. So I support Representative Sherman's amendment, and I wish we could have a conversation about this issue that doesn't so quickly get into intellectual dishonesty. We hear on the one hand that we don't need all this enforcement, we don't need all this tracking because the blockchain lets us know all the history of transactions. On the other hand, it's really important for us to have anonymity because there's all sorts of reasons why we have to have mixers. Those two things are not intellectually consistent. And we need Representative Sherman's amendment to do something really important, to say that entities who are deemed payment stablecoin issuers under this bill would have to prevent their tokens from being laundered through mixers because that's what they do. We know that mixers, which obfuscate the source, destination, or amount involved in their transactions, play a serious role in financial crime, including money laundering. Treasury's Financial Crime Enforcement Network, working with law enforcement and other national security agencies, issued a determination in 2023 that convertible virtual currency mixers were, quote, a primary money laundering concern. This rare designation from FinCEN was issued because, as FinCEN said at the time, quote, mixing transactions are frequently used by criminals and state actors to facilitate a range of illicit activity, including but not limited to money laundering, sanctions evasion, and WMD, weapons of mass destruction, proliferation by North Korea, Russian-associated ransomware attacks, and illicit darknet markets. Further, a recent assessment by FinCEN determined that the percentage of transactions processed by mixers that originated from likely illicit sources is increasing, end quote. To say that payment stablecoin issuers would have to build protections into their technology to block mixer addresses on their blockchains is to say that these US dollar-backed stablecoin issuers will take action to make it harder for ransomware perpetrators, cyber thieves, and fraudsters to launder the proceeds of their crime. That seems important. It's one that I would think everybody here should support, especially if we're all concerned, as I think we are, with fentanyl trafficking, Iran, North Korea's nuclear ambitions. The idea that this is just some noble person who wants to hide their bank account violates all the fact that we know how people are using this. They're using it to do bad things and to hide their trails. I can't imagine under what circumstance it is in the United States' interest to make it easier for people to traffic drugs, to facilitate weapons of mass destruction, to fund the North Korean nuclear program. I don't think that is the purpose of US fiscal policy. We need Mr. Sherman's amendment, not just vote for it, we need it if we're going to say we believe what we say we believe. Urge my colleagues to support the amendment and yield back.
Gentleman yields back. Does any other member seek recognition on the amendment? Seeing none, I recognize myself for 5 minutes to strike the last word. I think this broader conversation as it relates to sanctions is a pretty worthy conversation of the committee. The bill is really just not the appropriate vehicle for this type of restriction that would fall on entities other than payment stablecoin issuers because it falls on other market participants. So in addition, this amendment I think is also a little overly broad and under-specified. It risks sweeping into a prohibition that providers of software services that can be used by the general public, including for lawful purposes. And so the gentleman is only interested in prohibiting mixers being used to evade other sanctions, and that is a different amendment with a narrower scope than the one he's proposed, something that's probably worthy of a conversation in a dialogue as we look to move forward in the broader digital asset space. So I appreciate maybe the intent of the underlying amendment, but I don't think that it's specific. I think it's outside the context of the underlying bill, and so I'd encourage my colleagues to vote no on the bill. Is there further debate on the amendment? Seeing none, if there's no further debate, the question now occurs on the amendment offered by the gentleman from California, Mr. Sherman. All those in favor signify by saying aye.
Aye.
All those opposed, no. No. In the opinion of the chair, the noes have it. The noes have it, and the amendment is not adopted.
I ask for recorded vote.
Recorded vote is requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. Is there an additional amendment? Mr. Foster is recognized.
What? So, or my amendment, yeah, okay. Yeah, I have an amendment at the desk.
It is Foster. Mr. Foster has an amendment at the desk. Does the gentleman from Kentucky request a point of order?
Reserves a point of order.
The gentleman reserves a point of order. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to
Without objection,
HR
the amendment is considered
2392.
read. The gentleman from Illinois is recognized for 5 minutes on his amendment.
Thank you, Mr. Chair. My amendment simply inserts the language from the Senate bill that will require stable coins issued under this bill to build the capability to freeze, seize, and burn the tokens themselves when they're identified to have been used for illicit purposes, such as drug trafficking, terrorism finance, you name it. And these provisions just allow stablecoin issuers, in coordination with law enforcement officials, to freeze, confiscate, or destroy these stablecoins. Nearly all of the major stablecoin issuers operating in the United States today have this capability already built into their stablecoins. And this amendment would simply make clear that this should be the standard for all stablecoins issued here in the United States. In our March 11th full committee hearing, one of the Republican witnesses enthusiastically pointed out that they had been very successful at blocking some major illicit activities using these capabilities. In fact, just this last month, stablecoin issuers have reportedly used this capability to freeze nearly $30 million in stablecoins associated with suspicious activity or sanctions. Digital assets without this capability have almost no mechanism to limit their movement around the world, allowing them to be stolen by bad actors, sent overseas, run through a mixer, and deposited into the pockets of scammers, criminals, and our adversaries. It's not perfect, but it allows you, among other things, you can't always detect which wallets have been used for bad purposes. But when you do detect that, it provides a mechanism to be able to freeze and reverse mistaken or fraudulent transactions. So although this language won't entirely halt the use of stablecoins in illicit finance, it allows the assets to be made useless or inaccessible to criminals once they've been identified. So I appreciate why the Senate included this language, and that's why I'm offering this amendment. That's it. Yield back.
The gentleman yields back. Does any member seek recognition? Does any member seek recognition? Does the gentleman from Kentucky insist on his point of order? The gentleman withdraws his point of order. Mr. Caston from Illinois, now properly labeled, is recognized to strike the last word.
Thank you, Mr. Chair. I want to support Mr. Foster's amendment. This amendment would add important national security capabilities to this bill. It would ensure that regulators require payment stablecoin issuers to build into their technology the capacity to freeze on-chain. So that means that payment stablecoin issuers who are created by this bill would have the tools to restrict access to funds held in those stablecoins in the event that they need to do so to comply with regulations to prevent illicit activities. Let's just imagine a scenario. The FBI comes to a payment stablecoin issuer, proof, court order, says that U.S. registered corporate entity to which it sold its stablecoins is actually owned by Iran's Islamic Revolutionary Council Guard or the Sinaloa cartel or some other bad actor. The issuer would then have the tool to freeze the addresses, blacklist, and even confiscate those tokens. That would ensure that bad actors would not be able to access or transfer those tokens to continue with their fraud, money laundering, or sanctions evasion violations. Many of the prominent existing stablecoin issuers, such as Paxos, Tether, and Circle, already have this capability, and many new companies that arise should be compelled to do the same. I would add that similar language is already in the Senate's Genius Act, so we should have the same protections in the House stablecoin bill. Urge members to support the amendment, and I yield back.
The gentleman yields back. Is there further debate on the amendment? Seeing none, I'll recognize myself for 5 minutes. I'm going to strike the last word. Statutorily requiring all payment stablecoin issuers under the Bank Secrecy Act to block, freeze, or reject transactions would raise legal, technical, and policy problems. We want to be careful not to push innovation into closed systems and risk driving development offshore, undermining the open, interoperable financial ecosystem that stablecoins help enable. The Stable Act already requires issuers to engage in robust BSA compliance, including via AML programs, monitoring suspicious activity, which can include appropriate distributed ledger analytics, as well as compliance with sanctions. Because of that, I urge my colleagues to reject this amendment, and I yield back. Is there further debate? If there's no further debate, the question now occurs on the amendment offered by the gentleman from Illinois, Mr. Foster. All those in favor signify by saying aye.
Aye.
All those opposed, no. No. In the opinion of the chairs, the noes have it, and the amendment is not adopted.
Recorded vote.
The gentleman requests a recorded vote. All those in favor of recorded vote, please raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. Is there an additional amendment? Who would like first?
Whatever you want to go first.
Mr. Caston of Illinois has an amendment at the desk.
I'd like to reserve a point of order.
The gentleman from Kentucky reserves the point of order. The clerk will please report the amendment.
Chat. Y'all go ahead, tap in on the channel on Coin. What's that? Coin Desk. If you try to catch that, the rest of the stablecoin meeting, man. Shout out to y'all. I'm leaving this chat real quick, man. Leaving it. I'm out.